Welcome. We're super excited to have you join our Ask an Angel. We might have to change that name because we've been interviewing angels and VCs all over the world, but we just call everybody angels. So maybe we'll just stick it with that, and we won't tell what an angel is. We'll just say that all good people. Welcome. And the best way to start is if you could share a little bit about your background, kind of your journey, what you've been up to, and where you are today.
For sure.
And then the only other ask is if you can share one thing about you that nobody would know.
All right, let's go. I'm from just outside Toronto, Canadian. Grew up in Ancaster, just outside Hamilton. Sort of in the early stages of going 20s and 30s. Serial entrepreneur, a bunch of different verticals. Everything from hospitality to some land development projects to my dad was a huge environmental scientist and, helping out on some clean tech initiatives and really in love with entrepreneurship. I applied for a renewable energy permit here in Ontario on a what I thought was going to be a land development project, and was awarded one of the Green Energy Act renewable energy permits. Was very surprised. I would love to say it was, a whole bunch of planning and intelligence that led to that, but it was, a significant component was luck. And so I had to learn a lot about renewable energy and ended up developing one of the largest solar farms in Canada. I monetized that project or the development work to a Panasonic anchored private equity firm called Coronal Group. They were about a $750 million fund. And that was sort of, my first real exit, if you want to call it that, of significance. And it was pretty transformative from a personal, financial perspective. Gave me a bit of breathing room to sort of step back and think about what I wanted to do next. And so I actually went back to school and I did my master's degree in entrepreneurship. The sort of process of exiting on that solar farm made me very aware of a lot of the gaps I had in my skill set. And I ended up being on the project kind of the de facto finance guy. And I use that term really, really sort of, that these are intentionally, quotation marks around it. I had no clue what I was doing. It was baptism by fire. I stepped into my first meeting or one of my first meetings to finance the project. And they were discussing, some guy was discussing with me the terms of debt surrounding the project. And he was talking about LIBOR. And I literally thought LIBOR was a guy. And so I went home and was Googling, who is this LIBOR guy? And it was okay, that's the London Interbank Exchange Rate. Okay. And it was very humbling, the process. So anyways, I went back to school and thought it was a great chance to fill in some gaps. And so I focused on venture finance within a master's degree in entrepreneurship. And so coming out the other side of that, the gentleman who was running the managing partner at Coronal, who bought my solar farm, he did really well at Coronal and sort of transitioned off and had been investing on his own as an angel, and thought it was time to sort of take it to the next level and start his own fund. And when he was looking back along his journey, he was sort of looking for people who he got along well with and respected, and amazingly asked me to come join him. And that was sort of the genesis of my joining Checkmate Capital. And so for the past 2 years, I moved from entrepreneurship to the dark side of venture finance. And I've been working with Checkmate Capital as a partner, put my own money in, and off we go. And so, we're sort of somewhere between a family office and a venture capital fund. We do take investment, but we also are definitely, unlike a venture capital fund, we use mostly our own money. We have a few different verticals that we invest in. Everything, I guess we're just a group of guys that got together and really love supporting entrepreneurs. And so if you can convince the guy something's good, we'll invest in it. But that seems to fall along our personal interests. And so everyone on the team is interested in I think we all have big hearts. So we tend to invest in things that help people, like health and healthcare and health tech, biocide, drugs that have the potential to change people's lives in a positive way. But we also have sort of this renewable sustainability lens where we like ag tech, we like waste to energy, waste to resource. We tend to take a view that things that are being thrown away are cheap to get, and if you can turn them to something of high value, then that's a great business model. And that sort of seems to be the lens, personal lens, and I guess Checkmate's lens around our sort of investment thesis. And I've been rambling. That's sort of my background and what got me to where I am today. And something that nobody knows about me, including like my loved ones.
Well, you can choose. It's more of
okay, like from a business perspective.
Yeah, whatever you want. It could be anything.
Out there, I'm an award-winning filmmaker. I as sort of a passion. In that time after I sold the solar farm, I have a love for visual storytelling, and I made 3 award-winning documentaries around themes that resonate with me. One was a documentary about mangrove forests, which is a really important ecosystem people don't know about, and a couple about animal-assisted therapy, where they're using animals to help people facing profound physical and psychological challenges. But interestingly enough, that skill set has actually been preposterously important in business, because ultimately the structure of telling a great story and the tools associated with crafting a compelling narrative apply all through business. Every time you're pitching, every time you're trying to talk to an investor or market your product, ultimately it boils down to the same principles of storytelling. And so it's been a very transferable skill set, if you want to call it that.
That would be huge. Just being able to take something and build a narrative around it, and then going out into the world and everybody's coming to you with the narrative of something that they're trying to sell, and you're looking at it going, maybe we got to change that a little bit.
And the myth is that it's an art that only creatives have access to. And the truth is that it's highly technical. There are standard structures and approaches that you can learn and you can develop and you can cultivate and you get better at. You don't have to just say, oh, you're born a storyteller. Some people have an aptitude for it, like everything, but the skill sets associated with being a great storyteller are absolutely learnable. So, that's and something that I continue to try and cultivate as far as a craft. And it's something that continues to benefit me, even if I'm not making films.
No, that's awesome. Yeah, I feel the same way. It's for me, it's really all about telling a great story to get people interested, understanding what you're trying to do. And that's kind of how we help, right? We're that in between accelerators, incubators, and funding. And we really try to get you to understand what you're selling. Because a lot of the time people just don't understand it. They think it's just selling a widget. This is what I do. But there's a lot more to it. And then tying that story into all of the other aspects of your business makes a big difference. And having that creative mind, it's not about coming up with the most clever ad. That's not what a creative mind does. It's coming up with, like you said, that technical aspect and being able to really hone in on the real problem and the real focus and pull that out.
Mapping out your customer journey and understanding which hurdles you're trying to overcome with your marketing materials, and then using those highly technical things to then, have some fun, come up with something clever. But the process of getting there, 90% of it is non-creative. 90% of it is just super technical. And that I think is a lot of people who are skilled at it, they hide that. They don't want you to know that 90% of what they do and is so valuable can be learned, but it can be.
Well, eventually I think it becomes almost like I guess in a way it's processable. Like it's kind of like a 10-step thing that you're going to go through each time. And if you can get yourself into that mindset, sure, you can do that. It's like a golf swing. If I stand there and go to hit the ball and I go through the tilt my head, put my shoulder back, push my butt out, then I got to do this, and then I'm going to shoot. sure, every time you can do that, but that doesn't mean you're going outside the box. You're not thinking things, and that comes from time, experience, and being through the crux of life.
Yeah.
So that's pretty amazing. And I love the idea on that you've had 3. I want to watch these. I'm going to go through them. The Mangrove one, I believe I actually have seen it, and I'm going to double check when I go into it. If is it online?
Yeah, they're online. I'll send them to you.
Yeah, I think I may have seen the one because it sounds very familiar.
Okay.
I know it's only because I watch so much stuff. It's not funny, but I'm a big fan of good content. So I may have checked that one out already. But either way, I'm excited to see them. I feel like I wrote a screenplay 4 or 5 years ago with a writer, and she was phenomenal. And if you're ever looking for a great writer, I should introduce her. But we wrote one and we pitched it around for a while. And then different versions of it started coming out. But we're, so it was, it's still out there. It's still pretty cool. Like eventually one day I'll put some time back into it. But we enjoyed ourselves whipping through that. It was very, I guess when you're learning something you've never done before, when it comes to writing a play or doing something, you're challenging yourself. It was pretty exciting. It was a lot of fun.
I can imagine. For sure.
So just to take a step back to, and I really love the fact of when you sold your company, one thing that always comes about and people always ask, like, what did you go through? How did you figure this out? How did you know when it was time to sell? Yeah. What were those things that really drove you to doing this, and why? What made you actually decide that it was time to move forward and like you said, enjoy what you had built and the outcome of it? What got you to do that?
Yeah, perfect. Teetering on bankruptcy.
I'm sure that's not the answer.
So much stress, way too much debt, personal debt and personal guarantees, and I was done with it.
Oh, really?
I went through the textbook definition of the founder's dilemma. I don't know if you're familiar with it. Noel Wasserman from Harvard University essentially studied entrepreneurship, and he realized that the data shows that a couple things. Data shows a couple things. One, upon first receipt of external capital, like 66% of founders will no longer be in control of their company within 3 years. 2, if you look at companies as a firm, as an enterprise, and you look at their sort of, valuation, enterprise value, companies where the founder is still in control of the company, generally speaking, are worth less in 5 years, as opposed to. And so, I received the solar farm contract for, a 3 megawatt solar farm that, in layman's terms, approximately $3 million a year for 20 years. $60 million. I wanted every cent of it, and I wanted to be in control. So I tried to finagle my way through this project to maintain as much control as possible. So I gave up no equity and, one or two partners, et cetera, et cetera, et cetera. And, all of the assumptions I made about being able to drive this forward were incorrect. The permitting took longer than I thought it would. The costs were more expensive than I thought they would be. The curveballs that got thrown at me in terms of litigation and whatnot. It got really, really, really challenging. And so the dream of retained ownership fell apart.
Yeah.
But then, I switched gears and decided, okay, fine. The best way to monetize all this work is to sell it. And it turned out being really great. It turned out to be amazing. But I can say that more challenging than the financial pivot, if you want to call it pivot, was the fact that the personal sense of failure that I had represented to so many people that this was my project. I was going to take it all the way and own this thing for 20 years. And I was going to be the first non-institutional solar farm owner. Like everyone else that was doing this was big companies. And I was a guy. And it's like, wow, I'm going to do this. And I told so many people I'd had the perfect plan. And so to then go back to those same people and say, hey, it didn't work out. That personal sense of failure was more profound. And that was the more bitter pill to swallow than just the financial strategy pivot. Mm-hmm. But I did, and I had to. And the process and everything now in retrospect, I'm so thankful for. I gained more, have learned more than I ever would have just if everything had went perfectly and smooth. I'm, you know, I think I'm a better person for the way it transpired. But I would love to say I was the architect of some, you know, phenomenally well-crafted exit strategy. No, I had tried so many times to become the king and realized that I couldn't be the king, but I could make some money and let someone else, you know, own the project. And so that was sort of the path, tumultuous path to exit.
Which isn't a bad thing. So the thing is that you realized it. Whereas a lot of people may have taken more debt on and more problems and been sued or whatever and not been able to produce the outcome. So what was that?
You know,
moment?
You laugh at people that had gold fever during the gold rush till you're in it. And then you start to go, oh.
Yeah, this is why my uncle didn't come here. This is crazy. Yeah. So what was what part made you change though? Did you wake up one morning and just say, I'm tired, I don't want to do this? Or was it like staged events that occurred and you were like, okay, no, I really can't execute this and I got to do this?
It's a culmination of, you know, multiple things stacking on top of each other. And, you know, you wake up every day and you're excited to work on something. It's your dream project. And then at a certain point you go, wow, I'm not happy. Like, this isn't a dream anymore. This is actually a source of unhappiness as opposed to happiness. And at that point, it's like, well, why are you doing this every day? Why am I getting up fighting over this thing every day? It's not even making me happy anymore. So, you know, I think one of the other cool things that came out of it is that I negotiated a pretty interesting agreement so that there's some retained performance benefit. So I kind of stay involved with the project for the rest of its life. And even though it's not in any capacity an owner, but I can still go up there and look at it. And, you know, 100 acres covered in solar panels. I helped make it, and I'm proud.
It's amazing.
I'm really proud of what I achieved. So,
you accomplished something that's huge and what everybody would want to accomplish. You were able to do that. I mean, just building a company, building a big contract, and selling it. But you came up with all of that, regardless of the pitfalls and the roller coaster ride that you went on. You still were able to make that determination move forward.
I would argue that almost any business person probably sugarcoats a lot of the elements of challenge and often either intentionally, so either consciously or subconsciously discredits the amount of luck that's involved in any successful venture. A lot of things have to align for something to be successful beyond just a good idea. And you know, to the credit of so many entrepreneurs out there who have great ideas, it's not always that you didn't have a good idea that something didn't pan out. There's also a lot of luck that has to align. You know, I define luck as when skill meets opportunity. So as long as you're continuing to work on your skills and being open to opportunity, absolutely, you will be quote unquote luckier and a luckier person, but it's ultimately variables that are external to your control that have a lot to do with the success of a venture. And, you know, one of you know, in the business world, there was sort of a switch from the SWOT analysis of companies, strengths, weaknesses, opportunities, and threats, to something called Porter's 5 Forces, which is the preferred framework now. And Porter's 5 Forces is sort of the acknowledgement of the fact that when you look at strengths, weaknesses, opportunities, and threats, you're really inward looking. But Porter's 5 Forces is like outward looking. And it's actually saying external factors have more at play on your venture than internal factors. And so, you know, and
that can come down to COVID. Like things that you don't even expect to happen. One minute you got a roller coaster ride, and the next minute you're.
Who could have planned for it? Yeah. I have so many friends. My first ventures were in hospitality. I owned a bar and a nightclub in the city of Toronto. They were very successful, and through that, huge network in the city of hospitality. You know, hospitality players. They are just rocked, and you know, some of these guys were like, you know, they felt like they had ATMs, like. They could just open another bar with their name and it would just print the money. And they're just like, how can I find another location to rent? That was their biggest challenge. And all of them are just like, what happened? They're still in shell shock. And then tangential, like to that industry, people in, events, or people in, people that provide technology and equipment for events. They're all rocked right now. And there's no possible way they could have, anticipated what's happening.
Or even how to embrace it if it ever did happen, and how they would pivot through that, right? It's not one of your main thing of focus. You're just focused on your business for now. And now I think there's going to be a lot of measures built into how people run their companies, or how they rent out their apartments, or how they do everything. There's always going to be this back end of your head thinking, wait, can you do this? Is this there? Is this there? Because if we ever get hit with this again, I need to protect myself. So there's going to be businesses that were blue chip or just steady growth things that are now going to be taken a beating and be classified as high risk, because you don't know what that possibility is with that, right? Like commercial real estate. I'm sure right now they're rocked, and everybody's like, they're probably pumping stories out like crazy saying, oh no, everybody's coming back to the city. And then you've got the real data coming back. The city of Toronto lost 50,000 people in the last 12 months. Sorry, from July 2019 to July 2020. And that's the most ever. And that's pretty big. So now you're going to say, well, that just seems like a minor 2%. Well, now put COVID in there, and now you're going to have a bigger change. You're not going to get taxes. So there's cascades everywhere, right? And it's got to be pre-planning and thinking about these things now when you build a company. So you made this pivot, you sold the company. How much of this, and you mentioned a little bit about this, but how much of this is listening and interacting with your environment to come up with this choice that you made? You mentioned that it's luck. Well, a lot of luck is just sometimes listening to what's going on. And a lot of times you want to be pushing it out. You're like, I don't have time for this, don't want to listen. But that moment, someone shared some real valuable insight that you could have thought about, but you were not really thinking of luck or thinking of opportunity. How much of that came into play when you were doing this?
I guess exactly like you said.
Networking, talking to people.
If you want to be luckier, you better open yourself up to more opportunities. And I think the losing the tunnel vision, kind of open to opportunity. Well, then I was able to act when something that I wouldn't have seen before presented itself. And so, I would say it's if you want to increase your likelihood of luck, then, what I learned was to just keep a wide lens on the opportunities that are around you at any given time.
And did that help you change and sell? Like, because you now had more opportunities, you knew more people. When you went in to sell, you knew who to go to right away, or did you kind of have to vet it out? Did you
trial and error, man? You have to figure it out. So I never sold a multi-million-dollar solar farm before. So you have to fake it till you make it. So the first 3 meetings, you go in and you're meeting these savvy, sharp, M&A focused, renewable energy funds.
Yeah.
And what do you do? Like, you listen to what they have to say, you try to understand what they're talking about, and you learn, every second you learn. And then by the 4th one, you know what you're doing. And you're not surprised when they try to, put some like Einstein's equation on the board to explain to you why your solar farm's not worth anything. And you can just laugh and say, well, I like Einstein's equation that you're trying to, fool me with, but the guy before you offered me 10. So you know what? You got to, no matter what your equation, you got to beat 10. And you learn how to handle yourself. And I really feel like, it's one of those things that, while I'm very, very happy with and extremely cognizant of the skills gained through my education, it is one of those things that you really learn best by just doing and accepting the fact that, you're not going to be perfect the first time. One of my favorite anecdotes is that there's a famous comedian named Charlie Murphy. He was on the Dave Chappelle show. He's Eddie Murphy's brother. Be really quick.
Yeah.
He bombs on stage. He bombs, and he comes back and he says to his brother Eddie, he goes, Eddie, I bombed today on stage. I'm really bummed. I need to be cheered up. And Eddie looks at him and says, F you. Who do you think you are? He's like, me, Chris Rock, Richard Pryor, Jerry Seinfeld, every single one of us have bombed. What makes you think you're better than us? We're the best 5 comedians on the planet, and we've bombed. Why do you think you're not going to bomb? And it was just like, that really, the story really stuck with me because it's so applicable. I was just reading today that on the success of Airbnb's IPO, their seed round was turned down. They got turned down by 75 investors before their first investment. And that's Airbnb. And it's like, those guys got slapped in the face 75 times. What makes you think that the first time you go with your fund to go raise some capital from LPs, they're going to say yes? What makes you think the first time you're an entrepreneur, it's your first shot at it? And so for me in this project, it was like, I knew that I'd never done this before. So it's just like, all right, I'm going to suck the first 3 times I do it. But,
But you're not closing on the first meeting, so you're going to learn as much as you can.
Learn anyways. So
and you'll get smarter for the next one.
Accept it. You have to accept it. Accept the fact that until you do something, you're not going to be good at it. And there's some statistics out there. You spend 10,000 aggregate hours at something, and you'll eventually be good at it. So just get on that path to spending 10,000 hours doing something. And if that's being an entrepreneur, then be an entrepreneur for 10,000 hours, and you get good at it. You just got to stay in the game.
Yeah, Malcolm Gladwell has pushed that well. I'm a big fan, and I do agree. You got to put time in. You got to focus. You got to be hyper driven, but you got to be open and minded. You got to listen and take all the insights from everybody, and then decipher that down into the right story or the right narrative that you need in order to grow and build. And then when it comes to the crunch time, ask questions and ask lots of them, because it's pretty crucial, because that equation can screw a lot of people.
Yeah, I agree.
So sounds like, honestly, amazing experience. Having any sort of M&A experience is going to do anybody well when it comes to investing and working with entrepreneurs. You mentioned that you went back to school, and was it in Paris? Was it online? How did that work?
Online, yeah, absolutely. It was the first. So HEC Paris, people don't know much about North America, but I want to call it the Harvard of Europe. It's
consistent. Yeah, massive school. Yeah.
I
always wanted to go there. It's like, that's why I have
creates more presidents in France than any other school.
Yep.
Consistently ranked #1 business school in Europe. Consistently ranked top 3 in the world. Really, really an amazing school, elite school. And they offered their first online master's degree, executive master's degree in entrepreneurship. I was one of the first attendees.
Perfect.
It was a phenomenally transformative experience. I think one of the myths of entrepreneurship is this guy who goes and builds something in the garage. He says, he drops out of college because college teaches you to become a robot, and they're bad, and you go and you be an entrepreneur in the face of school. And the truth is that much like Silicon Valley in its approaches has disrupted quote unquote entrepreneurship, the top academies and the top schools in the world, and now even down to all schools in the world, I would say, they have sort of assembled and consolidated all of the most powerful contemporary frameworks associated with trying to get a really customer-centric product out into market, how to actually apply tools and methods that increase the likelihood of success of entrepreneurship. And so for me, I kind of went in there cocky and being like, I just want to learn the venture finance side, and then was completely reshaped as an entrepreneur by customer centricity. Instead of trying to just come up with great solutions, which is sort of my entrepreneurial approach, is like, I come up with great ideas. Yeah. It was like sort of kind of reshaped my thought process into being like, really listen and look at what problems people have. And then there's ways you can help to create value for people with big problems. And it's a different mindset from the perspective of entrepreneurship. And as an investor now, it's something, because we're really concerned with making money. we're really concerned with the problem that you're solving, not so much how good your solution is. If it's a great solution to a problem that only one or two people have, or they don't even have, it's just a really cool solution. My dad's a scientist. He had this all the time. Incredible technological solutions to problems nobody had.
Or they didn't have it yet.
Or only if you're living in zero G in an environment filled with some type of weird gas, then it would be a really applicable solution. But like for Earth, where right now, and I think it really gave me a healthier lens, and that it took the ego equation out of entrepreneurship as well. Like, stop trying to think of this as some way to validate how smart or how good you are as a person, and try to think of the entrepreneurial journey as something that helps other people solve a problem.
I like it. No, that's very cool. Yeah, I've been a big fan of that school and followed it. And it's somewhere in the line of the next 10, 20 years for myself, but I will do that. I want to do my PhD, so I got to take some time to figure it all out.
It's really cool. I got asked now to come back. I actually help teach the MBAs now on the topic of the founder. The same story I shared with you, I now shared to the MBA class there about going through the founder's dilemma and some other aspects of the thing. But yeah, and in association with the Creative Destruction Lab in Paris.
Yep.
I'm teaching the MBA, helping teach one lecture at the MBA class.
Amazing.
It's pretty cool. It's pretty cool to come full circle from student to helping with the the other side of it.
Totally agree. Oh, that's wicked. So now take all of this stuff that you've done and it folds into what you're doing today at Checkmate. Maybe give us a bit of an idea. You talked a little bit earlier about the types of verticals you invest in. What things do you look for when you're working with entrepreneurs? What is it that you hone in on? And how is the business kind of shaped around your past experiences to get you guys where you are today?
For sure. So we're typically seed round investors. I would say in a lot of cases, companies, it's different because we invest in tech and in tech, but we also invest in bioscience and life sciences. So there's a bit of a different, let's say, there's a bit of a different journey in that, in tech, what you're really looking for is, people who've developed a prototype or something and they've started to find their product market fit. And now they need money to sort of, accelerate the process of taking their product to market. In biosci, people have found some type of a molecule or a drug, and they're still 6 years away from being able to sell it. Yep. So it's not a lot of the language you hear associated with sort of investor and entrepreneurial investment is not applicable, because you're not looking for someone with product who's achieved product market fit. But that said, in both cases, we're typically sort of the first institutional capital that an investor gets. So we'll lead a seed round or sometimes Series A, but typically a seed round, a real seed round, where they've done their friends and family, they've built something, they've got something here that now looks like there's a way to take it to market, or they're, in the case of drug, there's a clear regulatory pathway to receiving approval for this thing to be used, and so they're looking for investors, and we'll come in and give them that sort of mid six-figure check that they use in association with sort of the deal we structure with them to go out and also bring in, some other angels and high net worth individuals and to finish their round. And we'd be seen as the lead. And part of the reason why, our thesis is that we stay very involved with our investees, or like the companies we invest in. And we see that as our way of de-risking the investment. So our ability to help to leverage all of our entrepreneurial experience and financing prowess and, our global network of potential licensees and, customers. If we can bring all that to the table beyond just a dollar, then wow, that's a lot of help. That should help this company succeed, and so therefore be less risky in investment.
I love it. And it does help when you have a lot more hands make less work, as the old saying goes. But if you're able to help guide, but also bring a lot more to the table, it brings a lot more value for your end goal, which is helping that company get to the next stage.
Yeah, it kind of answers the second part of your question, though, which is what do you look for in companies then? And so then the human factor becomes super important for us, because if we're going to help out, we're going to be involved, we're investing early. So, we're 7 years away from a liquidity event. We're with you and we're together and we're interacting a lot for a long time. It has to be fun, and it has to be, a situation where you look forward to talking to this person and excited to help them. And so mutual respect, alignment of cultures, like business culture, all of those things are really important, and they have a lot to do with the person, and just not even their skill set, just like, is the first 10 minutes of our conversation, of our phone calls, like unintentionally spent just to catching up because we're so excited to talk to each other? Or is it like, an awkward silence and like, reading the notes? And if you're going to get involved with a company for 7 years and you're a small team that spends a lot of time together, it's got to be a human connection.
That's a good point. And that's built over time, right? That's focus and helping each other and being, delivering, open, right?
For us, it often starts right at the vetting stage, where we'll go and we'll typically, and when we begin diligence on a company, we'll ask them to go get some stuff for us. Like we want this, we want that, and do they deliver? Are they like? Does a founder actually come through and give you more than what they said they were going to on certain things? We have a Canadian company we invested in. I could shamelessly plug them because we love them, but first real Canadian investment is a group in Toronto called Lactiga, and we were their first institutional investor. And they have this incredible thing where they're taking the breast milk that's discarded from breast milk banks, and they've patented the way to isolate the most powerful antibodies. And these can be used to treat all sorts of illnesses that have really no treatment for. Everything down to actually showing efficacy against COVID. Diseases of the mucosal space seem to be really amenable to these antibodies that they're able to isolate. And it's from a source that's being discarded. It's a really incredible company. And so when we first met the founder and we asked him and we said, hey, we're kind of worried about the supply. Will these breast milk banks go and be able to, can you talk to one of them and just have them document the fact they'll supply? He got it from like 20. He came back to us with like a Rolodex, and we were just like, whoa, we didn't even ask for that. And he had it documented with LOIs and this and that. And it was just like, okay, we love working with this guy. This is awesome. And then, on top of that, we started chatting and we got along really well. And it was like, it became really comfortable to make that investment because, we really felt like there was something there where we'd earn that mutual respect. And like I said, it doesn't have to happen after the investment. The whole process of learning and earning starts, before.
Yeah. There's a mutual accountability on both sides.
Absolutely.
No, I love it. And that's some great advice. Right now, what we're going to do, just because we've gone through this great journey and I loved it. It was awesome to learn a lot more about what you've done and how you've got to here. We've got some rapid fire questions that we'll jump into if that works for you.
Let's do it.
All right. Okay. So the first one isn't as rapid fire only because it kind of ties into it. But so what got you interested in investing in early stage companies?
I have, I'm not interested in one thing. I have a really, really diverse set of interests, And so investing allows me to dabble in so many different things. I can have a conversation in the morning about the efficacy of the treatment of a drug against cancer. And in the afternoon, I can be talking about soil and compost. And then in the evening, before I go to bed, I'm talking with an edge computing company. And to me, that is like, that's like the juice of life is getting, and entrepreneurs are so smart and they've dedicated their lives to these things. And you just get to like feed off that energy. And so I feel so privileged and lucky. And the reason why I'm so attracted to it is like that ability to interface with the smartest people in so many different capacities.
I'm going to take that recording and put it beside my name on LinkedIn. So when they push play, it'll just say that, because I totally agree with that, because it's exactly how I look at things. Generalist, wake up one day.
I got excited even talking about it. You can see it like pump up.
Oh, it's very good. Oh, I almost swore there. It was very exciting. I like it. That was good. Okay, so what's your favorite part of investing?
Favorite part of investing? I would say probably origination. Origination is awesome. So origination is the finding of opportunities. And so I attend all of like the startup events and pitching contests and investor contests, and getting to see and hear all these incredible ideas. 1% of them are appropriate for Checkmate, but it doesn't mean I don't get to hear like 80 incredible ones. Like they're just not right for Checkmate, but oh wow, it's remarkable. Just got back from something, or if I didn't got back, I was here and watching my thing called the Needham Growth Conference. Okay. Investors only, but top 100 fastest growing companies in the world, or US at least, and just listening to what they're doing and the different exciting things they're working on. And I feel so privileged. Again, just such a privilege to be able to be part of that. And so, origination.
Awesome. Love it. How many companies do you invest in per year?
If we're doing everything right, I'd say maybe 10.
Okay. You mentioned verticals, but you can share it again, the verticals you focus on?
Yeah. Health and biosci, ag tech, waste to resource, would be probably our main. Where right now our entire team actually comes from renewable energy, and so we have energy and energy lens as well. We've done some energy investment, and right now we're starting a new vertical that we're all really interested in, and that's smart cities. Okay,
awesome. Do you have any due diligence requirements that you look for before you make it a commitment?
Many. We have a huge checklist we send out. I think our team, probably from the starting point in biosci, we have a pretty specific lens around IP. We want good defendable IP. I think we're probably less worried about these massive addressable markets. We're willing to operate in a more niche space if there's a clearer trajectory to an industrial purchaser or an exit that's reasonable.
Okay.
We don't have external capital, so we have a longer picture as well. As much not yet, at least. Maybe we'll have a formal fund in the future, but for now, you don't need to be out in 4 years.
Okay. Timelines for investment, like start a conversation to the end.
I want to say 3 months, but it typically takes 5.
Okay. You mentioned that you guys lead rounds, which is cool. Anything material-wise, like outside of material, the things that you really focus on when you're making an investment, the founder, the team? You mentioned IP, but is there something else that really is the nuts and bolts to the investment?
Yeah, for us, we want some aspect of our network or our skill set to provide an unfair advantage to the founder. So for instance, a lot of our team comes from Panasonic and has big roots into that industry. Is there some way we really help you? Like, oh man, if we just landed this company as a client and this company, this would really fly. And it's like, oh, we happen to know those guys. Great. This is perfect. Let's throw you some money. And then once you're ready, we'll just walk you over to, Frank. that's the kind of circumstance we love, some way in which Checkmate or our network and affiliates just gives this company the edge. And I think, that's sad for founders, because there's no way for you to know that, other than maybe researching us, but we love that synergy component.
Okay, love it. Any preferred terms that you like to invest on, like pref shares, common shares, debt?
Because we're early, we typically are convertible note.
Okay.
My three of our team are like hardcore ex-Milbank M&A lawyers. So, they have a sophistication with the documentation process that I get to sit back and let them work their magic. They can be pretty sophisticated with that stuff. But to be honest, convertible note is typically the form of investment we take.
Okay. Do you do follow-up investments or take board seats? Okay. Yeah. Board seats.
We've done follow on all the way up to pipe. Okay. We've gone the full way, series, seed to series X, and then pipe. Perfect.
Do you lead rounds?
Yes.
Sorry, wrong question. I'm looking at the wrong one here. Do you take board seats?
Yeah, it's almost non-negotiable.
Okay.
If we're not the lead, or we're not thing, but again, because of the synergistic relationship with our investments, so we're a lot more than just a cash investor, it's typically welcomed.
Okay. No, it makes sense.
Yeah.
And totally needed when you guys are trying to be close to the business to help them out.
Yeah.
Okay. So we're going to jump into probably one last question, then we're going to get to some quick personal questions. All right. The last question is, there's always a heartfelt story where you had an entrepreneur where she or he basically came from almost losing it all to just COVID hit and they just took off like a rocket ship. Do you have any kind of stories? And you can name names if you want. It's totally up to you. But just something that really blew your mind and it could be a hard story that people just won't be able to understand, but it could be anything. It's just something that comes to mind around what it takes to be an entrepreneur and how tough it is or how great it can be if you overcome the toughness.
How great it can be. It's always hard. I think the one little mantra I'm sticking to right now these days, as I stall to answer the question, is like, you can be overweight or you can exercise. Both are hard. Choose your heart. You can have a failed marriage or you can be alone. Both are really hard. Choose your heart. You can have a successful marriage or you can have a failed marriage. Both are hard. Choose your heart. You can be an entrepreneur or you can go to work at an office. Both are hard. Choose your heart. It's choice. And people who choose to go on the entrepreneurial journey, they're making a choice, and it's hard. But if you're the kind of person who wants to be an entrepreneur, typically it's really hard not to be. So you pick your heart. Both are going to be hard. And we've had founders. I'm not going to go into specifics of which company, but we've had founders lose loved ones. Lose their spouse and have to continue on. And then, the entrepreneurial journey is providing them that sense of meaning and fulfillment that, before, maybe only that person provided. And, that's been beautiful to see. And at the same time, I've seen the dedication to, or the need for entrepreneurship to, really, really have bad impact. And people stay with an entrepreneurial journey when, maybe not the right decision to make. And so I wish some of the mythology of entrepreneurship was removed, because it's challenging and it's hard and it's just a choice. And there's lots of great choices you can make. Often, I don't want to take up too much time, but even with funding, like I'm an investor, venture capital investor, very specific type of investment. And often entrepreneurs confuse investment with validation of an idea because we're like seed and early stage investors. That first time you land an angel, wow, it means I have a great product. The only thing that makes your product great is the market, if they choose to buy it. That's the only real validation of your product from a commercial perspective. And so the trap entrepreneurs fall into where they care more about getting venture capital investment than they do about launching a successful product. For so many entrepreneurs I see, they come and tap me on the shoulder and ask about funding. I'm like, you're not even right for venture capital. Like this is a lifestyle business. And then there's some like judgment associated with that. Lifestyle businesses are the best if you can find them. Don't have a VC sitting on your head. The guys I know that drive Ferraris and Lamborghinis, they all have lifestyle businesses. They own like auto body shops, or they have like some like thing. And, they live in mansions and they drive Ferraris, and there's no judgment about lifestyle businesses. They just don't follow the trajectory required for venture capitalists to make money.
Yep.
That's fine. It's totally fine. You get loans, you bootstrap, you make a business. It does great. And it's great because people want to buy the product it makes or the service it sells.
No, I love it. And that was very well said. I agree. So now we're going to jump. And the reason why I agree with that is because people have not dived into all of these components enough to understand each piece of it. So they have to leverage and utilize some measure to feel that they've got a win. And then they use that to keep building their next steps. They just need to shift around what that win looks like. And the win doesn't always have to be around venture capital or getting wins from the angels. It has to be wins that I got from my clients and that I've got product market fit. And then I'm going to be able to get those other wins. Those should be intrinsic value that gets added in after, because when you build something great, the VCs are going to find you. Yeah,
absolutely. Or you got margin already and you don't need VCs.
Hey, wait a second. It will be out of a job.
Back into the business and yeah.
Exactly. All right. Well, we're almost at the end. It's been fantastic. So we've got 3 questions.
Okay.
Your favorite movie?
Ooh. Ponette. French film about a little girl who loses her mother in a car accident. Unbelievable. It changed my perspective on film.
What's it called?
Ponette.
Net.
Just a stunningly beautiful film.
And which character would you play in the movie?
In that movie?
Oh, yeah.
Well,
which character represents you? Like, what character would you?
The little girl has a best friend, but they're like, it's a very funny friendship. But his name is Mateus, and I would be Mateus in the film, like a minor side character.
Awesome. No, perfect. All right. I was just going to start with your favorite sports team, then get into these, but it came out faster because of you're in movies. I got so excited. I was like, movie question first, but what's your favorite sports team?
Raptors are it. There's no other team. The
Raptors. All right. I love it. Well, I do these questions because I learned from one of the startups that we work with. I listen to their podcast and they interview. They have a couple of different ones, but the main one is that they interview sports celebrities in basketball and whatnot. But they also have one where they interview the moms of basketball players. And it's really awesome because they get to learn so much about the individual that you wouldn't have got just by talking to him. Or in the case of the basketball, they do women's basketball too, which is phenomenal. So they bring all these people in together in their podcast. So it's pretty awesome. And they always ask little questions at the end that are more personal. And I've never done something so personal. So I thought, you know what, I'm going to challenge myself to find out something personal with somebody. And those were the best because I learned so much from the film that someone likes, but the character they pick. So then when you watch it, I actually learn more about that person thinking, oh my God, I can see how that blends. Yeah, that makes sense. Absolutely. And it's cool because people pick a character so close to themselves that it actually represents a lot of it. It's pretty cool.
That's fascinating.
Yeah.
Yeah,
so Yeah, so I want to say, Dony, one, I'm so glad we got to finally do the interview, and I'm glad that we've been chatting this over this whole period of time and learning a little bit more and seeing all the things that you're doing, and you're doing awesome stuff in the ecosystem. I'm going to follow up with you after all of this because I'd love to continue chatting and picking brain and sharing some of the stuff we're doing and seeing where that may tie in with yourself. But in the best of how we always like to close off our shows, we want to give you the last word, and that is to share anything that you want to say to investors or to startups, any advice you want to give them. But we turn it over to you for the last word.
Oh my goodness. Right now, at this time and this day and age, I just want to wish everyone health, happiness, and success. You know, the top of that just being health. You know, I spend every morning, I wake up and I have a lot of gratitude for being in a circumstance where, you know, I'm not worried about my health, but I worry about everyone all the time right now, and my fellow Canadians and my fellow humans. All I do is just want to, if I could take a moment to anyone who's listening and sincerely wish you good health in the next little bit, you know, that for me is enough.
Awesome. Well, I appreciate it, man. Fantastic. Thank you so much. You did a phenomenal job, as I always do. Took lots of notes.
Right, man, thank you so much. Really appreciate it. Love what you're doing. Love your support for the community. It's so needed. And, you know, look forward to our next conversation.
You bet. I'll book out something for you. But in the meantime, keep it up, man. You're doing awesome. Thank you very much for your time.
You too, man. Cheers.
Yeah. Well, that was awesome. And so many cool things just from the schooling, the types of investments they make. I love the fact that he's a Raptors fan, and I got to check out this Panay movie. That sounds really cool. And the film that he took, his film learning to tie that into creativity around helping startups and what he wants to invest in. So, and I like some of the stats he threw out about the 66% of companies that receive funding will be taken over because they won't operate. And maybe there's a way to change that so that entrepreneurs will stay just as hungry as they did when they start. And then looking at this Porter's 5 forces, very cool. Either way, Dony, fantastic. Thank you very much for your time. Thanks everybody for joining us.